Hello, friends. For all employers, the best day and the most magical moment in the whole month are often at the end of the month when they receive the 3 words through SMS. Salary is credited. The feeling is different when you receive the hard-earned money from your efforts. But if I tell you about something even more fascinating today, it's about the 3 words dividend is credited, which is the secret of wealthy people. Because 150 years ago, the world's richest person, John D. Rockefeller, mentioned in an interview, "I have found ways of making money that you know nothing about." And when I tried to understand the explanation of this line, I couldn't find it anywhere on the internet. Then I looked into his biography, and it turns out that he said, "Do you know that the only thing that gives me pleasure, it is to see my dividend coming in?" When I understood the power of compounding correctly, I realized that there are 2 types of people in the world. One with salaried income, who work for their income, and when they come to work the next morning, they have to set it back to 0. But the other type is those with dividend income, which grows much faster than salary through companies. Even if they stop working, the income keeps coming in, making the rich richer, while the poor remain where they are. And this is the secret I'm going to explain to you today. So in today's video, we'll first discuss dividend investing strategies. Then we'll find out how you can find dividend-paying stocks. After that, I'll tell you a real-life example of how you can achieve financial freedom quickly. Then we'll discuss its pros and cons. First, let's try to understand what a dividend is. The stock market has 2 types of stocks, growth stocks and dividend stocks. Whenever a company makes a profit, the company's management has 2 options. Either reinvest the profit in the business for future growth, which increases the share price, or if the company doesn't need the money, because it has a lot of cash reserves and can't invest in growth, the company pays dividends. This tells us that in the stock market, we can make money not only in one way, but in 2 ways. When the stock price increases and when the company pays dividends. Now let's learn how to find such dividend-paying stocks. For this, you can go to any stock screener like screener.in. From there, you can filter the stocks and analyze them well. Along with this, let me tell you another thing. Being a big company does not necessarily mean it's a very stable company. In the stock market, you need to use common sense along with technical knowledge. The calculation begins with understanding how much profit the company is making in comparison to its share price. It is expressed in percentage form. For instance, if the share price of a company is 100 rupees and the company has a dividend yield of 3 rupees, then we know that this company has paid a 3% dividend. This can be understood as a profit, indicating how much percentage of profit you are making on the money you have invested. However, having a high dividend does not necessarily mean you should blindly choose a company. If a company with only a 1.5% dividend is fundamentally strong, it can still make a good profit in the long term. This can allow you to retire on dividend income alone. Let me illustrate this with an example. A few months ago, a person shared on Twitter that his friend had purchased 1,000 shares of ITC in 2004 and did not sell it. Since then, the company has given bonuses several times, and now he has around 45,000 shares of ITC. He mentioned that he earned nearly 4.5 lakh rupees last year, only from dividends. This person calculated the difference and asked if someone could tell him the share price of ITC in 2004. So let me explain the details to you. In 2004, the share price of ITC was almost 1,000 rupees. I extracted this information from the company's 2004 annual report because the current price has been adjusted for bonus shares and stock splits. The person invested nearly 10 lakhs rupees, and as of now, he has around 45,000 shares. This company has performed share splits and given bonus shares multiple times. So he is getting back half of the invested amount as a dividend, and he is going to receive this type of dividend every year according to the company's performance. So friends, now let's discuss the pros and cons of this stage. The first and biggest advantage is that, on the stock market, you can grow your funds at a much faster rate. If you invest in your 20s in a high-growth performing company, when you reach your 30s and 40s, that company will also mature and become a dividend-paying stock. In India, there are many companies still in the growth stage, so investors in this stage earn a lot of income. If you want to invest in shares, you can open a free Demat account by clicking on the link in the description below. The third and biggest advantage is that you get diversification in stocks. But in real estate, if you invest 50 lakh rupees, you will only get to buy one property. But here, you can diversify the same amount into 10 to 15 different companies. And there are other benefits that we will discuss in detail in upcoming videos. Now friends, the only disadvantage is that you need to have good knowledge about it. But according to me, this is not a disadvantage because you need knowledge in any field, whether you invest in real estate, gold, or any other scheme, and those who do not have knowledge take the biggest risk. As your knowledge increases, your assets will continue to grow on its own. The way many people do not know the power of compounding correctly, due to which people never start investing. So if you want to watch such informative videos, then subscribe to the channel and press the bell icon so that you do not miss important videos. So, whatever questions you have in mind, you can ask me by commenting below, and I will cover them in the upcoming videos. If you liked the video, press the like button. Thank you for your valuable time, and goodbye.